Turn around straight again. If you bought your home at the height of the market in the early part of this century, and you're trying to sell it now, it's almost certain that it's worth less now than it was when you bought it. And that's going to be the sad truth for a lot of people for a considerable period of time. It does not, however, mean that you cannot sell your property. The other thing that was happening at that time was that people were also getting 100% financing on their mortgages, sometimes more than 100% of the value of the property. And now your mortgage is likely not to be paid down very much in that period of time. And since the property is worth less, the property is probably worth less than your mortgage. It's worth less than you owe the bank. And many people feel like they can't sell their home under those circumstances, but it is possible. This is what's called a short sale, and it's called a short sale because the bank is, in order for your sale to close, the bank is going to be short on the amount of money that's owed. But banks are agreeing to that, and they're agreeing to it more readily and more easily than they used to, because they have finally figured out that they lose less money by allowing you to sell your house for less than it's worth, sell your house for less than you owe the bank, but is market value, than it is for them to foreclose on your property because you can't afford to keep the house anymore. So, we list the house in the normal way. It's a normal sale. We list the house for market value, even though that's less than you owe on the mortgage. We immediately contact your bank to tell them that that's what we're doing. They are likely to do an appraisal and determine their own idea of how much the house is worth. And when we get an offer from a buyer, not only you have to sign the contract agreeing to that purchase, but the bank also has to sign off on it. Now, what this makes a problem for the buyer is that it sometimes takes the bank weeks to months to actually give us a definite answer as to whether they will agree to the contract. And that means you've got to have a buyer that's willing to wait it out. When we list it in the multiple listing service, we have to tell the public, the potential buyers, and their agents that this is potentially a short sale, so they know what to expect. Once the contract is agreed to and the property is sold, you need to understand that you will not get any money from the sale of the property. None. On the other hand, once the bank has determined that you cannot afford the property anymore and that you cannot afford to pay off the loan with some other funds, then the bank will also allow the closing costs and the commission and all of those things to be paid out of the sale, as long as they've determined that you don't have the money to pay for that. So it is possible. It is possible to sell your home even though you owe more on the mortgage than the property is worth. If you have cash available, the bank will expect you to contribute to the difference. But if you don't have it, you can still sell the property. It's a bit of a complicated situation, and it's going to be a little bit different for each person and their circumstances. And I'm happy to have you give me a call, and I can talk over your particular circumstances with you and see what the possibilities are. But don't despair, there is a way out. Give me a call, 860-214-3974. I'll be happy to talk with you.